I'm just wondering, tough times ahead for Chinese banks, you think?
I think the overall for the China's growth, I think it's on track. It's stronger and faster than expected. So I think currently we see the consumption data. Actually, it's especially for the services. Actually, it's a very strong recovery since the Chinese New Year. For the investment side, I think for the infrastructure investment is hold very strong, and for the manufacturing investment is resilient. And also for the housing side, I think it's actually the negative drag will be much narrowed this year. So as a whole, we think that this year is recovery on track. We expect for the first quarter 3% of GDP growth, and the second quarter will peak over 7%. So as the whole year, we expect around 5.5%. So I think it's a pro and a con for the bank side, and I think that as mentioned, it could be have some pressure for the government to urge the banks to provide more loans. But at the same time, I think the credit expansion is always positive for the bank side. So we think that for bank side, because of the recovery, so for the value stock, normally it's on neutral. We are on the value stock, but we are more a pro for the growth stocks, including this kind of cyclical ones industrial consumption, a green economy.
Right. Yifan, what are the chances that China will be back being the darlings for investors? We just had the IMF saying that China and India will account for half global growth.
Yes, I think so. That's actually make China much more attractive. We know, because this year we expect the soft recession, for the U.S. economy. So that's maybe for the other regions as well. So I think that for the soft, for the recession, actually, it's will benefiting for China and other emerging countries. So that means the first for the exports will not be too bad. It's already supported by the March data. Soft landing, we think that for the exports will maybe shrink to 0% rather than to the negative territory. And also for the China's GDP growth, we also have the spillover effect for the APEC emerging countries. So I think as a whole, I think for the China's GDP, if it's over 5%, could contribute over 50% of the global growth this year.
Yeah, IMF saying something along those lines as well here. But, one thing that we've, of course, had to really look at and it's been a massive drag on China is the property. Now, is the worst over there? And, what are you making of this? And how does that affect overall the whole business cycle? Because it is different, naturally, as you've already alluded to, compared to the West and other countries.
Okay, so for China's housing market last year is a big drag for the China's GDP growth. Combined the direct and the indirect impact, we estimate is a -3% to the growth. So this year, I think it's a recovery. Actually, now it's much better than expected, given for the February and the March data. And we say actually this market is warming up, especially for the existing housing market and also for the new housing. It's picking up, and also it's reflecting the for the credit data for the household, the mortgage actually increased rapidly. So we are not say we are overall optimistic on the housing market now, but we think that it's a recovery is on track. So we expect this year for the drag will be much narrowing down from the -30% of the sales last year. Will be probably -3 to positive 3%, and also its contribute to GDP will be 0. So we think the drag will be phasing out, so will be more neutral to the GDP growth. So that's actually gives some confidence for the China's GDP growth to be above 5%.